big welcome. We will have people coming in during a couple of more minutes. So happy to see a lot of founders here, and a big welcome to Boris to start with from Partech.
Hi, everyone.
I'm quickly going to just tell you a little bit about Fast Track Malmö for the ones who don't know who we are. And some like short house rules. This is what's going to happen today, like short house rules, some presentation about Fast Track Malmö, Partech and Boris, and talk about the value add of VCs amongst other things. We've got a lot of great questions from the crowd that we're going to try to answer in these 45 minutes. We'll try to be as effective as possible. And a short Q&A with subject that comes up during the day. Short about Malmö, accelerator in Sweden. I would say we're the best accelerator in Sweden and the Nordics, and some will agree with us, but I think we're doing a really good job. Humble enough. I'm just kidding, but we try to do our best. We do it once a year. We have 500 applicants, and we take in 7 to 10 teams, and we invest in them. We invest 50k euros in every team, and then they come to Malmö for 3 months in the spring. Hopefully we give them great advice. We have great mentors and people coming in helping out with that advice, and one of them is Boris that is here today with us. Others are the community in Malmö, amazing founders and other people helping out with the program. So that is what we do. We focus on companies who bootstrap themselves or had a small angel round and took them into a position for seed investment within like 6 to 12 months. Then we are super happy to have them here. And as I said, follow us on LinkedIn. We're there, Twitter and YouTube. So that's short about Fast Track. And I'm super curious to hear about Partech and you, Boris, a little bit, and how you ended up where you are now.
Yeah, no, sure, absolutely. So hi, everyone. Thanks for being with us for this lunch. So actually, I already had lunch so that I have energy. I hope digestion won't make my capabilities too weak. So now, super quickly about Partech, and I don't want to be too long on this because there is so much online already. But so Partech is a venture capital firm. With a few characteristics that can be interesting to mention is that we invest across stages and geographies. More concretely, it means that Partech, we have a seed fund, a venture fund and growth fund, being able to invest from the very, very, very beginning, which is the fund I work with, all the way to almost pre-IPO rounds. They are obviously very different jobs. When you find out, 2-3 co-founders, having sometimes even a very raw vision, all the way to being companies with hundreds of employees and already being like close to profitable and having a lot of revenue. So that's the whole scope of what we do. And the choice we've made that is quite unique at Partech, not totally unique, but quite unique, is to have dedicated funds and teams for each stage, saying that's a very different job to assess companies, but also to support them. And the second interesting characteristic is the fact that we have quite a global footprint. We have offices in San Francisco, Paris, and Berlin for our main family of fund, knowing that we also have a strong presence in Southeast Asia, and we have a dedicated fund in Africa for Sub-Saharan Africa. So that's a bit, the high-level, vision of Partech, and to zoom slightly more on what is of interest today, I think for most of you, is the seed practice of Partech. So I'm one of the partners for this practice. We are a dedicated team, and we run a dedicated series of fund for seed. What we call seed can be anything from literally 2 people already in the job, that plan on building a startup, all the way to 10, 15 people already having launched a product. And we would invest 200-300K up to 2.5 million. Could be as a lead investor, could be as a co-investor. We don't have, we are not dogmatic. If we love the company, we'll be happy to support. And myself, really quick, I was a researcher in theoretical computer science. I transitioned to entrepreneurship really by chance. I discovered the startup world. I liked it, and I really became an entrepreneur by chance. I did 2 companies. One was a miserable failure. The other was a reasonable company and a great product and a reasonable company. And I sold it to a big French scale-up back then, and then I became a startup mentor because I was really passionate by the idea of trying to gain advantage of what I learned and try to come up with things that could help other entrepreneurs. And that's how I also by chance transitioned to venture capital 6 years ago. And we start to have like quite a good portfolio at Partech. And I mean, we now have like 3 unicorn that we funded in the past 5 years from like pre-seed and seed. So it started to really a nice journey. And that's it. And I could speak for hours about it, but it's not the purpose. I'm sure it gives you enough context to understand who I am and what Partech is doing.
Yeah. Okay. Just like a short one on that subject. Like, what do you love about your job?
I mean, my passion is really to support founders as early as possible. The reason for as early is that I think what is really crazy about our job is that we work with projects that are still really, really raw, like super imperfect and hard to believe in, right? And what I like when you are so early in your journey with the founder is that there is so many things to define. So the DNA of the company is not clear, the positioning is not clear, sometimes the vision moves a lot. And I'm passionate by trying to be the best partner for entrepreneurs to be building the foundation of the company. And so what is super cool when you arrive really early in many of the foundation are super undefined, or even when they are defined, they would move a lot, or you need to refine them. And that's really what makes me the most exciting.
Okay, cool. And what are the biggest mistakes founders are doing in that stage that you see?
I mean, I think I can think of a few. I'm not sure it will be the biggest because I mean it's hard to rank, right? But I mean, I would say it's a lot about the people having the wrong co-founders. It could be either they are not the right person, or either there is not enough of a fit to go through this super hard journey together. And it could be also about the wrong first hires or key hires you will make in the first years. It could, I mean, also very much be having a vision, a positioning, an idea. I mean, you mix a bit all of those that ends up not resonating at all with the market and not being relevant, and where even adjacent, concept would still not be good. And so this can be also a fundamental mistake, right? And there are many of those. You could come up with a list of 10 of those, but I mean, I would say they are probably, working on really the wrong foundation in terms of idea, concept, vision, and with not having the right people surrounding you as a founder are probably 2 of the deadliest mistakes.
Yeah, so team and product market fit. I agree with you. And we at Fast Track Malmo have the luxury to meet teams really, really early. And as you say, like they don't have anything, it's imperfect. So what we look for, like, is like, who is the best team? What's the founder market fit and founder product fit? So that is really important stuff. Jump into like the role of VC. So yeah, we have a lot of VC funds out there. Deals are being done, maybe not in that pace that we maybe hope for. That there's going to be a lot more deals. So you see, the trend is like we have a fewer deals. But so that is something I'm taking into this discussion. But also, like, what's the value add of a VC? What do you want? What do you want? When does it work? Like for you, when you work with startups, and what value do you add at Partech, or what you've seen? Like,
so I mean, yeah. So I mean, it's a pretty complex and large question, and so I can try to give you a 5 minutes overview, and then I think it will be prone to many questions because that's not something that can be answered in a definitive way in a few minutes, right? But I mean, so first thing is from scratch when we started to build the seed franchise at Partech. I mean, we were a bunch of persons who were passionate by the entrepreneurial journey, and so we try to come up as much as possible with something where in our daily job we'd be able to spend time supporting I mean the founders. And I mean, the very first thing, and I will be provocative here a bit, is design a funding that is supporting the founder. The number one reason why people come to us first, not the main reason why they pick us, but the main reason why they come to VCs is because you need money, right? you would hardly see someone going to VCs, that don't need money at all, right? Just saying, I need advisors. No, if you need advisor, you know what? You would go to independent board member. You would give them 0.5% or 1% of equity. So if you want to be a great investor, the first thing you want to be is a great investor before being a great, company supporter. It's not the sexiest part, right? And it's not the one we advertise for our value, but I want to start with that because it's the basis of the job. And guess what? Every day we see that it's a basis that is not so easy to do and that many people don't get right. And very, very quickly at high level, because it's not the most important and interesting part, but still the basis is you want to price the right type of funding for seed stage, the right kind of ticket size, the right type of, of terms, being flexible enough that the cap table is optimized and not optimized selfishly for your ownership. You want to be super aligned with funders and have a healthy offering. I can give you an example. I mean, most seed investment comes with a firm that would typically be willing to lead the Series A afterwards, which can cause a great bunch of misalignment with the funders for two reasons. First, it means you won't be optimizing for who the next investor is because you hope it will be yourself, right? And secondly, is that if you are not trying hard to lead the Series A, all the market will say, oh, why aren't they leading? So us, for instance, we are a seed franchise and we define ourselves this way because Partech has 2 billion euros under management, so it's huge. We want to make it clear to people, the market and the funders, that we won't lead you Series A. We are a seed fund, right? So that's something that is very important. And the fact that ourselves, each single deal matters to us because we are dedicated seed investor, right? We are not doing at the same time Series A or B. We would follow our existing company, but we are not leading A or B round, right? So that's something really important. And seed is also a craft where you need not to be afraid of risk or write-off or losing your money, of iteration and pivot, right? So we just have also, from a basis, a mindset where we totally accept that the plan we've agreed on and the plan you kind of sold us as a funder will change, right? And that's fine, right? You're not a Series B startup with a business plan that you will execute line by line. And the last point that is super important, and I will put all this under funding because it's not business value add, is being easy to deal with. Before the investment, after the investment, just, oh, I would like the official go for this, or can you sign this, or I mean, can you provide feedback on this? I mean, this is not adding value, right? But if you spend 2 weeks dealing with that, this is removing value. So I would say the very first job of a seed investor is making sure you would never remove value, right? And the financial and legal elements are very important. Okay, until you say that, even if it's not so easy on the market, and many people can be hard to deal with. You wouldn't say, oh, that's fantastic, I would pick this person because they would not be removing value for my business, right? Even if some entrepreneurs that have lived the story of having removed value investor would actually be super happy to have people where they sure. But I mean, especially in the competitive market today, first, that's not very exciting to be this kind of investor. Oh, I'm not removing value, select me. It's not very exciting. And secondly, the market is becoming more and more competitive. I mean, this wouldn't be enough to be picked on the hottest deal. Side note, in seed, most deals are not hot. Most deals are nobody want to invest, right? Because the leap of faith is huge. So it turns out that more than half of the time, even in the current hot market today, we don't face intense competition. Our biggest competition is our own mindset and our own ability to see through all the noise you have at pre-seed or seed stage.
And that is going back to point 2, right? Acknowledging there's a lot of risk. These teams are going to pivot. They don't know what they're doing.
And subjectivity, the subjectivity of looking at a team, looking at a project and saying, I mean, is there something here? And the truth is that there is no hard science as to is there something here or not, right? And even in a team, we're a team of 9 people, we won't all agree, right, that there is something there, right? But I mean, you need a thesis to say, here is why I believe there is something here, right? That's kind of all you need, right? It needs to be back and so on. But for same thesis, I would say I don't believe in this. It's a consistent thesis, but I don't believe in this thesis. And one of my colleagues would say, no, I do believe in this. It would be one of my deal. So let's get back to your real question, because your real question was not how, as a seed investor, do you try not to remove value, but how do you add value? I mean, so the way we like to think about this part of the job, which is I mean, probably is where we spend the most of our time, right? Is supporting, our companies to hit escape velocity, right? Really very much like a rocket, right? Our core job as an investor is typically to be there from pre-seed to Series B, right? When the company start to expand the sales team like crazy and expand to multiple continents, and I mean, usually we could still be on the board, especially if we've been the lead investor early on, but we would less hands-on when it comes to building the company and the foundation. I mean, at very high level, our job is to be advisor and coach to build strong foundations. And and we rely on our seed expertise, on the knowledge we accumulate and the experience we accumulate through different portfolio, and on the time we have. And that's a very important element. It is that what we sell to funders, especially related to Partech, for instance, we tell them, Partech is 75 people, more or less. So it's a big firm, right? We are a small seed team within this. And so we are organized in a way that we benefit from the platform effect of Partech, where we spend most of our time with funders, not running our funds, not managing finance, managing legal, not doing the marketing for our fund, not hiring, because when you're a small seed fund of 5 people, you are actually running a business on top of being an investor, right? And so you all know, what it takes to run a business, right? I don't run a business. I'm a seed investor within a bigger firm. So that's what we leverage. And let me tell you quickly what more or less, I try to define more or less 7 foundations where I say my job as an investor and our job at Partech as an investor is to help funders build those 7 foundations. And first is business vision, strategy, and positioning. Can look like super high level. This is one of the biggest jobs we have in the first year of the company, because actually it's pretty rare that it's super clear what you're doing. And even when it is, oftentimes when you confront to the market, you see you need to redefine yourself. So you could say it's not exactly product market fit, because we're speaking about the conceptual element here, not yet a practical element. Yeah. Then there is how this translates into concrete elements, which is a product, a business model, and a distribution strategy. So here it's about actually defining what you will build, right? The third pillar, I think of is a notion of what is the strategic focus, what is my growth plan, what is my roadmap. So defining the milestone and the path you foresee in the next month, in the next quarters, and potentially the next year, even if next year is much more prospective. So you see, there is already a mix between very strategic elements and more concrete elements. There is, of course, all the part around quantifying all this with KPI, having a look at the finance and cash, and potentially reporting on the company to make sure that everybody always understands what's going on. That's a part I didn't like a lot, the finance part at the beginning, because I wasn't a finance guy. And of course, cash is king, right? I mean, and the number one thing I want to know, is cash fine? Then we can discuss, you're scuba diving, do you have oxygen, right? If you don't, you're not, and then when you get these basics, you go to the next step, right? And going to the interesting part.
Okay, so fix the cash part first, and then we can talk, right?
No, but usually there is no cash to fix, right? But it's more like at the beginning I didn't see this part, and I had a few bad surprises, and I didn't. I mean, if you have a company that has cash issues, you haven't done your job. It's great if you have help the company imagine what the business is and the business model is, and but if the company has 2 months cash, you haven't been doing your basic job. Is do you have the resources to keep living before dreaming, right?
And runway is like how many experiments do we have still left until we die? And let's make sure we have a lot of experiments to do until we die.
And when do you need to fundraise? Which brings us to the next point. I think that probably I would say our most important role is about fundraising, the pitch, the equity story, and the ambition of the company. Because the truth is that this captures all the rest. Because fundraising is a punctual event happening, say, every 18 months. That is a target, and also a moment to reflect back on what's happened and what's next and where you stand today, right? So it means all the other dimensions I've mentioned are captured by those fundraising. And actually, I've come to think at those fundraising as one of the major milestones you need to think of, not because it's a goal per se to fundraise, but only because if by VC standard the startup is successful, it will raise, even if it's highly profitable. I have 2 extremely highly profitable companies that both fundraise crazy rounds, right? Because you know what, when you're profitable, then your question is, how do I accelerate even stronger, right? Not, oh, I'm profitable, great, I don't want to fundraise anymore, right? So this is absolutely fundamental. And the good thing is that as investor, we have really hands-on expertise when it comes to fundraising, pitch deck, business plan, and equity story, and the ambition of the company. And the last two elements are related to people, and we touched base upon it a bit earlier. And there is one of the pillars is hiring, team organization, and management. And the last pillar is the founders themselves, supporting them psychologically, emotionally, and helping them grow with the company. So really those 7 pillars here, high level, business vision, strategy, positioning, product, business model, distribution, concrete translation, within time, strategic focus, growth plan, roadmap, how you measure, KPI, finance, cash, then the resources to make it happen, which are fundraising and pitch and equity story and so on, the people you hire and how you organize your team, and the founders themselves. That's the 7 pillars. And our job as investor is to help founders build solid 7 pillars, right? And then you might have major minerals topic you're more comfortable with, topic you're less comfortable with, but your job is to make sure they will work on those 7. And some founders will need more help on some and so on. How you will help will change tremendously between founders. Some it will be like super deep dive workshop on many topics, over it will be like more informal course, over it will be more board meetings, over it will be more like plugging them with the right expert or with other funders, so it can be, and everyone will have their own style, first as a VC, and everyone will have their own style as a founder. But what is important, my job is to make sure that I provide the maximum possible input, whatever is the form of this input, so that those 7 pillars are as solid as possible when the company will be raising the Series A, right? And then the truth is that Series A is not over yet. You keep building, and usually when you reach Series B, it's typical, right? It's not always true. But you would have those pillars really right, and then your job as a supporting as investor is mostly done. And then if during this period you have built a strong enough relationship with the people and the business, then you will still be involved with the company because you would have a strong intimacy with them, but you will start have more scaling, matters that are less of the expertise of the seed investor. So that's the high level. Sorry for being long, but
I love it. I love it, Boris. And I try to write them down, but I'll probably have to go back and see what we said here. But it's amazing, and it takes me back a bit to a follow-up question on this one, like the last 2 elements about the people, because we kind of struggle, like people who have like hard advice, like, and then we have coaching, like asking the right questions, and like, how do you see that? Like, how do you see that? Is it a 50-50 thing? What is important for founders, or is it's like based on situation? And who are you as a person there?
Yeah, no. So I mean, what I come to learn so far, and I've been a bit 6 years and a half in the job, so it could be like a long time, but it's not that long in VC. So it means I'm still at the beginning of my professional journey as a VC. So I mean, first thing is there is no one size fits all. And what you want to do is build this trusted relationship where people will actually be open to having you as a, you name it, facilitator, advisor, coach, enabler, you name it, right? I mean, that's the basis. If the funders I work with and I back see me as a financial investor, it will mean 2 things that will prevent us from building a valuable relationship. The first thing is they wouldn't consider me as being potential adding value to the business. And second thing is they would consider me as somebody who shouldn't be aware of the imperfection of the business, but I should be someone to whom they shine, right? So that they are sure that I have the best possible image of what they're doing. If this is the relationship you have, is broken. It means that they would never see the incentive or the interest of exposing me with their issues, the question, right? Because I mean, telling me that's great, we signed this great customer and we're all good. That's fantastic. I mean, for me, psychologically, I like it, right? But it means that from there, my potential to add something, okay, yeah, I can ask questions and so on, but I mean, it's very limited. If we come up and can discuss the real issues in depth, then it's the basis for me to be able potentially to add value. But for this, I need to be considered by the funders as someone who can receive this trust, right? And so this is something that's very important, and it requires, as an investor, in my opinion, to separate 2 hats. I have my investor hats. My investor hat, I won't put it often. I will put it when I discuss the direct interest of the funds, right? And direct interest of the fund might be refinancing, an exit discussion. So in this case, I would have my 2 hats. Most of the time, I have my other hats, which is as independent as possible advisor and coach. And the way I can rationalize it to explain why it will be consistent is, first thing, I submit that's my duty, my ethical duty towards funders to be this neutral advisor. But then they are not the one paying me, right? The fund is paying me. So I could say that, and then the fund would say, yeah, but funders are not paying you. We are paying you, right? I mean, and the way to rationalize that is to say, maybe not in the short term, but in the midterm and the long term, I believe that the interests are aligned, because by being the best possible advisor to funders, not taking into account the direct short-term interests of the fund, I think I help them build the company. And ultimately, if I help them build the company in the midterm and long term, it will be good for the fund, right? And,
Yeah,
and,
exactly.
and
No, I
that's
love
really
that.
the way I think about it.
I love that, Boris. I will share something. I have it on paper. I started to sketch what is a good, like, when does it work? Like, so I have this like expression called like TTR, and that is time to relationship. How quickly can we get to that relationship where we can start to talk about those important things? And then I have some more things like time to understanding. How quick can you understand what they actually need help with? And then it's another discussion. But an interesting thing is here now, but you're sitting in France, you're investing in Sweden and other countries. How can you like go into the juicy stuff, giving value and creating relationships online? Because that is making it a bit harder, I think, to get through that kind of thing. We had a whole Fast Track Malmö now for 3 months. And, I thought we had a relationship maybe, but then like one of the teams, we had this reflection last week, they said like, yeah, they were having a problem with their co-founder that was leaving, and they opened up to us. We didn't know if we could say it to you or how this would sound, and he wants out, and how do we fix this? And we had that discussion, and they felt
it makes total sense. So I think I have several elements to answer this point. The first thing is that, and then I will be more personal here, speaking more me personally as an investor. I tend to work with people where we have a strong personal fit. Right? If there is, I wouldn't invest in business if I don't have a strong personal fit, but it tends to be quite a defining criteria in practice. So it means that, and there is also some unexplainable things. Sometimes with some people you would click really easily. You would see a flow of conversation, of human fit, of thinking, where you say we're aligned, we speak the same language, and there is natural trust and fit. And for others, it would not be there or take more time, right? So I tend to be biased towards people with whom quite quickly the communication is fluid and there is a human fit. So that's the first element.
Okay, relevant question to that one. How aware are you on diversity in that part? Because you're French, you're a man. Are you thinking about like, do you have like, do you think about that? And is it effective?
Yes, absolutely. So on my side, from what I think of myself and what I hear from people around me in both personal and professional setting, I don't think I have more difficulties in connecting. If we just speak about connection here with women and men, I don't feel like I'm being. I might be, but I've never heard something where women would say I was a bit uncomfortable with you, because you were too many or whatever, right? So on the French aspect, I must say that historically I was connecting better with French funders. And I feel like it changed recently, especially for the last 18 months with COVID. I feel like because we all had this remote relationship also. But just my brain, I can still feel that my brain is more fluent in French, right? And that it's more effort for me to communicate in English. So the way I perceive it in practice is that I feel like I need a bigger human fit with people with whom I wouldn't speak French, because there is a kind of cognitive cost to me not to be speaking another language and thinking another language. But the truth is that it's getting better and better. Not so much about the language itself, I think, but about something I wouldn't be able to describe it. But I still think I'm a bit. I wouldn't say I'm biased. I'm just more comfortable usually with French founders. Yeah. And there is a lot of more things to discuss about men versus women entrepreneurs, because it's much more for the connection. I think on the connection I don't have really a problem. I think then on assessment, on forging your opinion and so on, I think there is a lot going on, but it could be a totally separate discussion, but an important one. So that was my first point. The second point is making people really comfortable and explaining how you see your job and your work style, right? And I think I make it very clear quickly in the relationship with funders before we decide to work together, how I work. And I have, because I've been 6.5 years in the job, I have material to share on this, right? First, there's been articles I wrote about the journey with some of the portfolio company I've backed, where they can see that I'm deep into the business and that I've been really alongside with the founders. There is also the ref checks they would do on me before we start working together. So, and I know that the entrepreneurs they would speak with, they would tell them the story of when I was there in tough time, and that so they could see, oh, it's not just because everyone can say I can pretend anything, right? Yeah. But when you've been founders I've been working with for 5, 6 years, even founders that I don't work with anymore, and so on, don't have an incentive to say good things, they can see that. And my commitment, I say, I will try my best to be helpful. I can't say I will be transformative for you. We'll speak about this in 5 years, right? But what I can tell you is that I will be perfectly minded when it comes to a relationship and my ethics, and try to do the best I can to help you. That's my commitment. My commitment is not to be incredibly useful. I do the best for, but this I cannot promise. It would be a lie to promise, right? And here is the kind of thing I know to do quite well. And here's the things where a new business, maybe I will be useful, but honestly, I don't think I will be useful. So I think it comes with a lot of transparency and self-awareness of your own style and where you believe you could be more or less helpful. And then you throw this to the funders. There is also I mean, I'm someone quite easy to read, right? So yeah. It's also, I think that people will also quite easily figure out who I am, right, as a person, and assess if it's their style of board members they would like or not. And you have the ref checks. And all this together.
I like that, like talking about the how you will work together and how and what they can expect from you. And it's trickier online. I think it's trickier. We had this batch coming in. We of course invested in them, and we had this reflection last week. And then one of the founders told me like, yeah, you told us like consider us like co-founders these next 3 months, and we thought like it was a bit cheesy and then it ended up, of course, that we had an amazing time, and they felt that we really helped out with unconditional love. Really tried to help them out, but it is harder online, like to get through, like to get to know each other. But very good points there. You will say, I will do my best. I'm great in these topics. I will help you with the other ones, but don't come to me. And this is a good question as well. I've noticed I'm pretty like open and easy going and person as well, and I'm good at creating relationships. But the problem is when I do that, people come to me with questions that I'm not best at it. I know 100 people who are better at it, but they want to listen to me. So how do you do that?
So sorry, they want to listen to you. I didn't understand this last part.
Yeah, no, I mean, you have that relationship. They want to ask you about everything. But you know that there's another person in Partech that are really much better than you in this, but they will probably listen to your advice much more, like, and they don't really like, because they don't have that relationship with that person. So how do you fix that?
Yeah. I mean, so I think I think that there are two parts to answer. I mean, the first thing is I try to find out about why, as a venture capitalist, I would be well positioned to help the funders, right? And the reason for that is I entered in this job with this conviction, and that's my passion, right? But many investors and entrepreneurs would tell you, yeah, no, but I mean, it's not the same job being financial investor and being actually supporting funders to build a company. It's not the same job. And I mean, factually speaking, that's true, right? One job is to allocate capital to interesting startup and to make a ROI, on the shares you bought, right? And the other is to help people build a company. So the overlap is not clear. And I came up with like 6-7 reasons why I say, if you want to, I think being a VC is ideal position, to be in a position to add value. I mean, and the first is, you have a lot of context about what's going on, but still having this external point of view. When you're inside the company, you would lack more the external point of view. And when you're an advisor, a punctual advisor, you lack the context, right? And because think about it, if tomorrow you send me one of your portfolio company and you say, oh, Boris is great at X and he will help you, I will need 2 hours just to catch up with the company, to have the right context and so on. And if it's one of the founder I've been following for years, in 5 minutes I can answer the question because I already have like most of the context. Right? So this is already an unfair advantage of being intimate with the company, but not an operator in the company. The second is having the time and availability. If a founder call me after this call, I can call them back and be there. That's my job to do that, right? many skilled people, it's not their jobs, they don't have the time, the availability. And it's very important. I came to realize that speed is something super important in this job. And you cannot imagine how happy founders are when you are able to react really quickly, right? Because it's something top of your mind. And of course, you can be free tomorrow at noon, right? But if you could have this question tomorrow at 2, it's much better. The third element is, of course, the alignment of interest. I mean, I'm not a random person, even genuine and that is altruistic. I'm also someone who has direct financial interest in your business. So most likely you would trust me to be willing your business to succeed, and to have skin in the game in this. Another element is the fact that I'm a legitimate person to ask to, because I'm representing a fund that is a shareholder to your business. So I can have a say in those decisions, even if I don't decide. And the second thing is that that's my role in my job. So I'm someone who feels legitimate to speak to, right? Both with the relationship to the company and the role. And of course, and that's the thing about a full-time, company supporter. I have variable and up-to-date experience. If you speak, for example, about what it meant to build a product, I was the CEO and product guy at my startup, but it was 8 years ago now.
Yeah.
So the knowledge I have from this period, if I was still like, when I had my startup 9 years ago, this is but I mean, great for you, right? But 2021, so maybe the way you are building a digital product, 8 years ago, so having these up-to-date experience, not as an operator anymore, but now I don't use anymore any of the knowledge I had as an entrepreneur. The knowledge now I use to try to be the best possible board member is knowledge that comes from my 6 years of being a board member, right? Not from my years of being an entrepreneur, because it's too dated, right?
Yeah, that's sad, Boris.
And there is the skills and the know-how. I came to understand that sometimes you would say, look at here, there is a danger, or this is an important question. And 2 months after, people realize it and say, I told you 2 months ago.
Yeah.
And I'm super angry when I hear that, because when I hear someone saying that, because I'm just like, you know what? You're super guilty. If you told this person 2 months ago and that this person didn't listen to you, you're guilty, because it means you didn't find the way to, and it happened to me several times. I'm just like, my job is not just to say, oh, this is it, and to say, I told you, you didn't listen. No, my job is to make sure and to have what I call also the skills and know-how to say, okay, let me take 15 minutes to explain you why this is important. Let me give you example. Let me give you example of what could happen. And so this is a skill, a real skill, not just knowing what could be right or what could be the right question. It's a skill to make sure that people get it and get the consequence of it. And the last element is that I'm not alone. I'm not a lonely advisor. I'm part of an infrastructure called Partech, with a network of resources with the community, on which I can lean. And it's back to your point, to your question, on which I can lean to help funders. And so the way I see my job is, I must be able to have all the conversation of the 7 pillars we have discussed, with the funders. I must be able to have those conversation on all. Then, if we go too deep into pillars, for some pillars, I won't be able to go deep, and I will say, look, here is, I think we're framing the question correctly. Now, I'm not the one who can give you insight on how to handle that. And I will try to leverage my surrounding to find the right person to. So I help you frame it, but then I'm not the right person. For example, it comes to hiring an organization. I'm not good at this. So I'm good at framing it, but if you look at practical detail, I won't be the person, right? And you need to know your limit and to be self-aware, because if not, you say, you need to do that, and then you will say total shitty stuff. And you're right. If people trust you, they might actually kind of follow a bit the direction you were pointing out, and it's a huge responsibility, right?
It's a huge responsibility. Thank you for that. We have a couple more questions, and I will.
Sorry, I'm super long, but
no worries. No worries. I love it. I love it, Boris. So we have Olivia here. She had a question like that she sent in, and from Swiftly. And any tips on how to raise money for startups within deep tech startups? I know you invested in one of our companies in deep tech called Neuralabs. So do you have any tips on deep tech?
Yeah.
No?
So that's not me.
Not Neuralabs. Sorry. Digital. Sorry.
Yeah. Digital,
we have so many.
That's my colleague Roman Finn. My colleague Roman Finn. Yeah. And which I wouldn't say is a deep tech startup, by the way.
No. I'm on another fund. Sorry.
No worries. And so I mean, so first thing, I'm not a deep tech investor. on our team, Roma is the most deep tech investor on our seed team. I mean, so I think that there are two things, right? To the question is, I try to answer to the generic question and then the more specific question. So the generic question is raising funds. You need a few things. It's stand out so that potential investors are willing to speak with you, right? Because the funnel is like this, right? So we just can't even speak half an hour with every single entrepreneur who's fundraising. I wish we could, but I mean, speaking first to entrepreneurs is only a very small part of my job. Most of the rest is